family, how you guys doing today? It's yours truly, Robert, and today we have something very interesting for everybody, something that I've never done before, and something that I'm actually proud to start doing. It was a very busy London Open and night for me with the euro and the pound, the cable. It's Friday about 12:38. I just got about 5 hours of sleep. I was up the majority of the entire London session, and basically what I did for you guys was I recorded live my entire London session and the 3 trades that I made some nice, handsome profits on, and you guys saw that. You know, I posted the screenshot, 48 pips on one of my cable trades, the initial London move, and then 40 pips on a New York retracement of that, and then a 35 pip trade in the euro. And we're going to talk about, you know, really how I was able to do this and how I was predicting the right side of the screen as it was unfolding. And you're going to see in front of your eyes that with annotations on the screen, very much like you see here, that I was calling the future and it was happening. And that's something there's nobody else out there can do, okay? Besides the mentor that showed me and his students, who are probably very well could be above me and above my level of trading. Besides our close group of traders, there's not another person that does this. None of these goobers on Facebook flashing, you know, profit pics, chasing Lambos and jets and stuff like that. You know, none of that stuff. They can't do this. You'll never see them do this, ever. And to us, it's not impressive. I don't care about the profit picks. I don't care about your Lambos and your jets. If you want to chase that bull crap, then go ahead and do it. Those guys don't know what they're doing. They're trading in the dark, and I guarantee you, if you don't believe me, send them this video and wait for the response, because they won't have one. There's nothing they can say or do that's going to disprove the information that I have here, okay? And you're going to see me play live these 3 trades with 0 indicators, no EAs, nothing but what you see on the screen and the stuff that's in my own brain. Okay, so basically I took 3 short positions. Okay, why? Because if you can look here, this is something that we were calling for an entire week now. Okay, the dollar is closing in this liquidity range here from about June 26, June 25. It's closing in this liquidity void here, and we traded right down into yesterday, actually Thursday's trading. We traded right down into a bullish order block right here, right to pretty close to the pip, and we see a nice bounce off of that. Okay, and we've closed in the liquidity void, and we're expecting in the dollar to see a reaction off of this level, and we saw the initial reaction Thursday. And because of that, during Friday, we're expecting a bullish bounce in this short-term bear market. Okay, now we're going to move into the euro, and we're going to cover the euro first. Now, you can see the screen looks pretty busy right now, and I just want to go ahead and overall go over the idea about how I frame this trade before I play to you live the video. Okay, that's what I want to do for you guys. Right here, we have a market maker sell model underway. We have an initial consolidation range, a run to support, and then right here, which we call a smart money reversal. Okay, and this occurred on Sunday. This is when the dollar came into that order block. Okay, right here, when the dollar pierced the order block, that's what you see happening in the euro. We're expecting the euro to as well pierce an order block, which if I zoom in, okay, you can see that the dollar trades right up to a previous bearish order block right here. And it trades right up just above it before we see a rejection on that level, okay, going into Friday's open. Okay, now because of that rejection, we're expecting a bounce, okay, bearish prices in foreign currencies because the dollar's gaining strength and it's rallying. So let's go back to my view here on the 15-minute. So if we zoom in onto a 5-minute chart here, you can see during Thursday, okay, that's when we see that, the end of Thursday, that's when we see price trade up into that order block, and we trade away from it. And we have a nice nice move away from it and going into Friday, okay, into Friday's London Open, what we see here is we see a nice rally up in price to an OTE, optimum trade entry, retracement of this swing high to swing low, and then we see a massive sell-off. Okay, this is what we call the low risk sell after the initial reversal point of the market maker sell model. You wait for it to reverse, you wait for it to come back up to the level, fail, trade away, and then you get in on a low risk sell. And I had a 5 pip stop on this move initially, which it ended up moving to break even. I'll show you guys that. And we collected 6-to-1 reward to risk on it, 35 pips. All the way down, it was taken out of the trade right down here. Okay. Now I want to go ahead and show you guys also the pound, the idea and the framework here. The same thing with the pound. We see a typical market maker sell profile with an initial, if we go to a 30-minute chart, or let's do 30. Initial consolidation down here, a run to resistance, and then price trades right up to that smart money reversal point, which is an order block right here. Okay, and this is actually a level of clean highs. That's why I have it annotated. Price runs stops in the pound. They run the stops to take traders out of the market. They trigger all of their buy stops, okay, because there were sellers here. So they have resting buy stops here, and they're trying to, someone needs to buy their orders, right? Who's going to be interested in buying their orders? The smart money. So they run the high here, okay, nicely, about 10 pips or so, collect the liquidity, and then we trade away from it, okay? And it's in line with the dollar and what the euro is doing, okay? It's moving in tandem with all of that. So we see that same concept happen here, where we see price, this one actually broke the highs at the new start of the day here. It broke those highs, and then we traded away from it, and we were expecting a trade to occur in a low risk sell opportunity right here, an optimum trade entry, retracement of this range high to low during the New York Open, optimum time frame to enter the trade, with expectations of holding this across a daily range to the downside, because we're expecting to have a down day in the pound and also a down day in the euro. We're expecting to enter above the open for the day during New York Open time frame, kill zone, okay, which is 7 GMT to 10 GMT, and holding across a daily range, okay. Now this comes in, this high comes in, on my chart it comes in at 10 GMT. Now my broker is 3 hours ahead of GMT, so that's in reality 7 GMT, the New York Open. We formed the high of the day, and it hasn't traded back up there yet, and we had a low all the way down here, which is a range of about 45 pips in total on the range there, okay. And then pound, same thing. We're expecting the high to form just near the open here, okay. Right here, we see it form at an optimum time frame. This high forms at about 10 GMT as well, okay, which is 7 GMT. The New York Open kill zone, we get in there, that's a high of the day, we hold it across the daily range. Now I got out of both my trades right here. This is the last point at which I got out of my trades on this down candle right here was when I got out, okay, right about here. That's when I got out. My New York Open trade I got out right on this candle right here at this price point. That's when I got out of it, okay. And you can see the annotations on the screen here as you're, take a moment to pause if you want. You can read the annotations. But we're going to go ahead and play the video live, and you guys are going to see it unfold in front of your face, and I'll kind of talk you guys through what's happening here. So let's give this a shot and see how well this does. So this is going into, if you look at my time frame down here, this is 11:54 p.m. It's 6 minutes before 7 GMT, and that's when that high forms right there. Now I had 2 limit orders placed in the marketplace, and unfortunately my limit orders were missed by 2 pips on both trades. It kind of really pissed me off. You can't win them all, but it is what it is. I had to manually enter these trades. As you can see, you'll see the annotations here. So we see price trading up. I'm annotating the dollar here. We trade down into that bullish order block. We see a nice reaction off of that, a failure to want to go deeper into the order block. We close in the liquidity void here. We're expecting a bounce in a bear market. Okay, here's my fib. It was overlaid on there. You'll come back to it. you can see how my trade entry, my limit order there was set at the 62 sweet spot. Okay, so here's a euro. We trade up to a bearish order block. We're expecting weaker foreign currencies, and you'll see me draw the order block out in time here. We trade right up to it, and we see a nice reaction off of it, a failure to want to go higher. We're expecting that bearish bounce and weaker foreign currencies at this point in time. Okay, we see that run high. Okay, right here, that's what I was talking about. That's that run high. Okay, now we see it trade away. I'm expecting it to retrace into that range to a sweet spot. That's why my limit order is right there. And now I'm just annotating the fact that we see a market maker sell model underway. This is how the market makers move into a selling position. They make an initial consolidation, followed by a run to resistance, which is just a secondary consolidation, and then they move up to a logical point to reverse price off of, whether it be an order block, mitigation block, institutional price level, OTE, turtle soup, which is what you see right here, which is a false break on a high, stop runs and things like that. So here's my Asia range here, okay? I'm expecting price to be, I want to enter just at the above the Asian session high. Okay, that'd be optimum for me. So that's why I have my Asia session range drawn here. Okay, so I'm looking at the new day here. The new day starts at 3 GMT on my platform because I'm 3 hours ahead. Okay, I want to enter somewhat at the opening price or a little bit above it. Okay, and you can see me drawing the fib. This is where I get my sweet spot, 113.50. This is my initial limit order. Okay, that's my initial limit order. And I end up missing it just by a few pips. It really pissed me off. I saw it, and you'll see what I do here. I noticed that I missed it. And I'm not afraid to get in on this move a little late. Now this is a pound. So now I'm annotating the pound as well simultaneously here. There's a clean level of highs here that price is reaching for to run the stops on. And we can see that. We have the stop rate right here. And also I'm annotating the fact that we have the market maker sell profile underway. Initial consolidation, run to support, smart money reversal up here. This is a turtle soup, false break, stop run right there because they want the liquidity that's resting above all these clean highs right here. If you look at this on the screen, guys, if you sold right here, where's your stop going to go? Your stop is going to go just above this swing high, okay? How many people are playing the breakout strategy right here where they see price breakout and they buy it, expecting this to be a bullish flag right here, and it's going to be a continuation pattern? No, that's not what's happening right now. No way is that what is happening. That's what retail traders are thinking. Okay, they're seeing this as a bullish flag. They see these clean highs, a level of resistance. Price breaks it, comes down, retests, let's buy. Nope. We go right down, and it drags you across the entire daily range for the entire day if you didn't have a stop set. That is not what was happening. That is not what happens. That's what the textbooks teach you. That's what these foo-foo gurus on Facebook teach you because they don't understand why is price doing this. If this was truly a resistance level, why does price spike 10 pips above it? Because there's resting liquidity up here in the form of buy stops. Sellers that are willing to get out of their selling position by allowing the smart money to buy it from them. Who would be interested in buying these individuals' selling position? The smart money. Why? Because they're trying to purchase, in this case, the US dollar over the pound. They're trying to sell this asset class right here, the pound and the USD. Well, there has to be a motivated seller. Who's willing to sell their position to the smart money? The idiots that leave their stop loss right here. And that's where they get tagged out right there. That's why price, the banks move up there, sweep the liquidity, then they have orders to pair with. And then they drag the range all the way down for the day. And you're going to see that unfold. And right here, I'm just annotating the fact that, yes, I missed my limit order by a few pips. No biggie, though. I'm double checking. You'll see that right here. Missed OTE sell by 2 pips. At this point, I'm a little pissed, but I'm still going to get into the trade. Where do I get into the trade? You'll see. So this is a pound as well. So I'm annotating the pound. I missed the pound by 2 pips as well. It didn't come right up to my 62%. And, you know, this is something that I could have factored in the spread a little bit more, added a few more pips to my limit order to make sure I get in counting the spread and whatnot. Because on certain platforms, this may have came up to this level right here. So that's why you do want to keep in mind the spread, maybe add 5 pips to your limit order just to keep that in mind. But what I'm going to do is manually enter the trade at the middle consolidation point of Asia, expecting it to trade down for the day, which is something I'm okay with. Yes, I missed about 10 pips on the move initially, but not a big deal. I sell at the return of the Asia consolidation with expectations of price expanding to the downside. And that's what we see unfolding right now live. It's expanding to the downside. This is a perfect New York Open Judas swing right here. This run high is organized. They're trying to duke the retail traders into buying the euro and the pound, thinking it's going to go up for the day. No. They're taking price to a logical level where they can reverse it off of. Okay, this initial move during the first couple hours before the London Open is organized because they want to get as many retail traders into long positions before they take price down because it just offers up more liquidity for them. That's a trap. Okay, the markets, they always move. There's 3 ways a market moves. Okay, there's 3 things that are going on here. There's accumulation, there's manipulation, and then distribution. That's it. That's the only thing that's going on in the markets. There's no bat patterns, no Gartleys, no RSI, no Stokes, nothing. Everything in the markets is based on price. And there's not another person out there that's going to teach it to you like that, other than my mentor and the students that he has. Everyone else on Facebook, flashing Lambo pics, their phones all over the place, the profits, not impressive. It's downright contagious to the aspiring traders because so many people, they get into Forex, they chase the fancy life, okay? And they're chasing these jokers that have no clue what's going on in the market whatsoever. They couldn't do what I'm doing in front of you. You won't see any other trading group out there do exactly what I have done right here. Live trade an entire session with you. And just watch, it gets even better. We're only 3 minutes into this. So I'm just going to kind of let this go. We see price showing unwillingness to reach a limit order. I get into my sell position. Immediate profit, no drawdown whatsoever. We are okay to sell with expectations of price moving down for the day. Back to the pound, same thing. Pound trades down. I sell at the return, no drawdown whatsoever. Keeps going down here. It's a classic smart money sell profile. That's it. I'm setting my take profit levels in as we speak. My first take profit level is set at this old high over here on the left side. That's the first objective for the pound, and it wants to close in this liquidity range. This order thing came up. This right here is liquidity void. There's not a lot of trading going on right here. They're going to want to close this in, and hopefully, maybe if they want to continue running the pound upward, they're going to form new buys down here as we close down into one of these order blocks down here before this large move upward. So that's where I'm expecting price to go, fill in this liquidity void. And if you look at your chart today, let's go ahead and do that so I can just show you guys. Look at the chart today. What did we do in the pound? What did we do in the pound? We filled in the liquidity void, completely filled it in. And I could have held this position for much longer. Okay, so back to the video though. Full screen, play. I'm setting my stop loss now. That stop loss is 25 pips initially. All my stops ended up moving to break even. So that's 2.5% risk on equity with a 25 pip stop. Take profit is 2-to-1 risk to reward as of this time. I'm targeting roughly 50 pips on this move. Pretty close to it. It actually came out to 48. Okay, I set that there. Again, I'm going to do the same thing over here for my euro. I'm going to set my stop loss in here. Just above that swing high. The initial stop loss is 5 pips. That's less than 1% risk on equity. You find another person on Facebook that does that. Other than my mentor and our group of traders, obviously. 5 pips risk, initial take profit set down here to the next reaction level, which is this bullish order block. You're going to see that this is roughly 35 pips away. Okay, at first it's 25 pips away. So that's going to give me a 4-to-1 reward to risk ratio. I end up moving the stop later in the video. You'll see why. At this point in time, the euro's taken off quite a bit. I see that. And what I'm looking at now is down here. There's some clean lows right here. There's resting liquidity here. There's sell stops here for people that were long. That's where price is going to go. It's going to reach into this liquidity. So you'll see me later on move my stop. And that's what I'm going to do now. At this point in time, I was 33 pips in profit. I moved the stop here to where I think price is going to go. It's going to reach for the liquidity to clean out the lows down here. Okay, I'm reformatting everything here. It's now a new 35 pip take profit level, which is 6-to-1 reward to risk ratio. Find another guru out there flashing pips all over his phone and flashing his Lambo and crap, making hype videos of drones and stuff that does this for you. It's not about what they have, it's about what they can give you. It's about what they can teach you and what they can show you. And there's nobody else that can do this. Because they're all indicator-based traders and they don't know how the market works. They're only happy when their indicators work. Did I bring up an indicator at all during this video? To this date, do you see anything on here? No. You find somebody else that can do this, that uses indicators. Send this video to them. Absolutely do it. They can't. This is absolutely uncomparable. The information that I am presenting here is unparalleled. Okay, we're waiting for the pound now to start moving. We see some movement, a little, reaction here. This is completely live trading, guys. Watch the time down here. Just watch the time go. We're 33 minutes, 7:33 GMT. 30 minutes into the London Open. This is called the London Express right here. You want to be on it in the right direction. And I can't tell you how many people get involved with this in the wrong direction. Okay, what I'm doing now is drawing my extensions here. Okay, my take profit level is right around the 200 extension level. Okay, so we're looking for this retracement range right here to extend down. Okay, and that's where my take profit level is, first one. And I'm calling in front of you what price is doing. Look at that. Price is returning to test Asia low. This is the low of Asia. That's why I have my Asia session box here to denote the high and the low of Asia. Why are we trading up to it? Because we're retesting the low of it. I'm calling it in front of you. It's going to fail to break it. Watch. And we go back to the euro here. Watching the euro. This is what you want. You want 6-to-1 reward to risk ratio. Risking 0.5%. 0.5% on your equity. All these people showing 5-lot, 50-lot trades, Lambos and crap, risking 10% equity, and they can't even take 30 pips out of the market. Are you kidding me? Get out of here. Stop posting pictures. You're an embarrassment. Because there's real traders out there. No offense, not to sound cocky, pompous, or arrogant, but that's not impressive whatsoever. You're risking 10% equity to make 10, 15 pips. That's incredible. Okay? Half the time they don't even show you their stop loss or their risk. Okay? What did I do right here? I showed you poor breakout traders rest in peace. Because people had a resistance level here plotted, price broke it, they would have traded the breakout and they would have caught all the way across the daily range here and held into a drawdown. Those are the neophyte traders. They cannot see the behind the scenes inner workings of what the markets are doing because they believe in the textbook stuff. Bullish flag. No, not a bullish flag. This is a turtle soup. Run on stops. Reversal to the downside. Close in the liquidity void. Now the euro's kind of picking up its pace here. This is where things get exciting. I'm checking the pound to make sure the pound is moving in sync. So this is trading in line with institutional order flow. That's why I'm writing that right here. This is how you trade. The most confident of all trades are these type of trades. Low risk, high probable setups. That is what you're targeting as an aspiring Forex trader. Okay, we're getting pretty close now to my take profit level. Yeah, I'm just going to let this unfold. You guys can watch it live, you know. This is absolutely something that nobody else does. I don't know, you know, of anybody else that can do this live for you and sit through an entire London session and show you exactly what they're doing, why they're doing it, and watching their trades come to fruition. All of my trades hit my take profit level. Everything hit my take profit level. Where I said price was going to go, it went. And I did it beforehand. And wait until you see my New York Open trade on the pound. We haven't even gotten there yet. What's happening right now is you're going to see the pound move into a little bit of consolidation here. Okay, and then come 12 GMT, okay, the first couple hours before New York Open, we're going to see a retracement of the London move. And I'm going to call it. I'm going to call the entire move. And I'm going to move my stop loss. At this point in time, I haven't moved my stop loss to break even yet. But you're going to see shortly, I'm going to move my pound stop loss to break even. But I'm going to undo that when we go into New York to allow it to retrace that London move. And I'm going to enter another sell position on the pound. Okay, and that one generated me 40 pips. This move right here got me 48. It hit my take profit level down here during New York. But right now, 1 hour into London, we're in a little consolidation right now. And this is just something you have to be patient with. You know, prices are going to take off in 1 hour. You know, at some points in time, you know, this video sped up 600 times the speed at which it was recorded in. Okay, so sometimes, you know, I'm away from my computer, I'm reading a book because I don't want to be in front of my computer all day long. That's boring. You know, I'm not addicted to trading. Trading to me at this point in time is boring, redundant, and just, you know, not very exciting anymore. It's profitable, but I don't want to be sitting in front of my computer all day long. You don't want to either. My mentor taught me that. He said that trading for you should be boring. It should be just this redundant process, but nonetheless, it should be profitable for you. And that's where I'm at, you know. All these people on Facebook, these trading houses and 6, 7 monitors and crap like that, like they want to be in front of the screens all day long. Have a life. You don't want that. You want to put a trade down, walk away from it for 6 hours, and wake up 7 hours later or so in a 48 pip profit. I made 120 pips on this London session. 12% return. In one session on 3 trades. How many of you, right? Ask yourself, how many trades do you need to take to make 120 pips? I ask some people, they say 10, 15 trades because I'm a scalper. Well, 10, 15 trades is a whole lot of time and exposure to the market. The more trades you have in the market, the more likely you are to lose. I don't want to be in the marketplace all the time. I want to be patient and wait for high probable setups like this to unfold in front of my eyes. And I want to get into it with zero drawdown, barely risking anything, with no worry and no headache whatsoever. And that's exactly how these trades today unfolded. And you're watching it live. And this is something I've never done. I never, ever live trade with anybody. I don't give out signals. I'm not a signal service, and I don't promote that, and I do not trade live with people. And there's reasons for that I've stated to many people who've asked me to do live sessions. This is as close as you're going to get to it. Is it the hindsight in replay, fast forwarded though, live as you're watching it. So now I'm okay with these 2 failed swing highs. I'm moving my stop loss to break even. We are risk free at this point in time. Never went into a drawdown. This is when you can really take a nap and go to sleep. When you're break even. This is kind of where it gets a little fun because you're like, okay, now I don't lose any money, and I know price is going down for the day, and I'm just going to wake up and my take profit level will be gone, and I will wake up to 35 pips in my pocket. And you'll see that happen here. I actually am away from the euro when it hits my take profit level. I just come back to the chart, I'm like, oh, it's gone. Boom, winner. So we're checking out the pound. The pound is in its consolidation, you know. Here's the euro moving down. We're getting about an hour and 20 minutes into London. This was a good London move on both of these pairs. Really nice London move on these. I'm really not that happy about my pound entry. It moved pretty quick away from that retracement level. I got in about 10 pips late, which is really another $100 on a one lot position. So not a big deal for me, but you know, I know price is going down for the day. You're not going to have perfect precision entries every single day as much as you'd like to. And in my opinion, I called it to where it was going to go. My limit order just could have been a few pips down, factoring in the spread, and I would have got in right at the 62 level. So I called it up to that level, and it reversed off of it. And you saw the fib. You can go back, replay, pause, whatever you need to do. You saw the fib on both of these, okay, right up to the 62 level. I called it beforehand and watched it unfold. And there's not another I'm telling you, there's nobody else with this level of understanding that's out there willing to teach you. But there's people out there that are willing to say this stuff does not work. But at the same time, they'll never post a video like this. They won't show what's in their own brain. And they won't parallel it up against this. Because it does not compare. It does not compare whatsoever. All these other traders' videos that I see teaching indicators and stoke and stupid animal patterns and crap, they won't pair their video up against this after they watch it. They won't. It just doesn't compare. It's not on the same level. This is how the banks trade, and there's a difference. Everything you see on the charts are the banks. Indicator traders, they just happen to get lucky and ride the bank's coattail, and they blame it on their indicator. Help them. Which is almost as damaging as losing a trade because you fully believe in the indicator at that point in time, and they don't work. Okay, and there we go. So I'll pause it here. Take profit level is gone, and 6-to-1 reward to risk ratio booked. 35 pips. Good night, Euro. Done for the day. Only 1 hour, 30 minutes into New York Open, and already 6-to-1 reward to risk ratio was met. Now we're just waiting on the pound here. So now I'm moving my stop loss here to break even. I do this initially, but I move it back up to the original stop loss area to allow for the New York retracement. And then I enter another sell position. You're going to see that happen here. You will see it, and I'll call the reversal right in front of you guys before it happens. And as it's happening, I'm calling the entire thing with annotations. Initially, I decided to make this video. I wanted to just leave the annotations on there and let you read through them. But I decided to make commentary for it as well, because it's going to help people. Because some of I can understand that some of these text boxes appear pretty quick and they disappear pretty quick. And I didn't realize that when I was making the video, because this is the first time I've done this. Plan to replay 5 hours of trading in 600 times its speed of recording. I didn't, really. I've never done this before, and I just want to do this because some people ask me, hey, can you do a trading session with us? Can you trade with us? And I always say no. No, I'll give you what's in my brain, and I'll point you in the right direction where I got all the knowledge, and I'll just, I don't reinvent the wheel. I'll just pass on to you the information that I learned, and better yet, I'll tell you exactly where I got it, so you can go to the source as well. But I don't live trade. I'm not here to give signals. I'm not here to compete with anybody. I'm just there to show what's inside of my brain. And when I do compete with people, it's because they can't do this. They're hypers, Lamborghini chasers, and jet pick freaking posters. None of that impresses me. And it's mainly because I'm a corporate pilot. I'm around airplanes all day long. So when I see people post a picture of a jet, it just doesn't impress me. I don't. I've ridden in them too. And I've, foregone the desire to take selfies and grab the free newspaper of the markets off the entrance of the airplane and pretend I'm reading it like I understand anything about the markets. Embarrassing. These people I see flashing profit pics with their indicators on it, reading the market paper, these guys couldn't even tell you the difference between ROI and IRR. Embarrassing. They don't even know how the markets work. They're indicator-based neophyte traders that will not hold a net profitable book for over 5 years. And most of them fund their live accounts with residual income from whatever company that they're freaking representing. and they lose and lose and lose, but they can keep their Forex count up because they're getting residual income. They spend all their money on hype pictures. I'm not about that life. I'm about real trading, the real knowledge, giving back to people. Not one of these fools on Facebook will make a video and actually teach anybody anything worth a damn. They'll teach you the textbook crap you get from Baby Pips for free, and they'll try and charge you $50, $100 for it. Not here. Not here. And I will call those people out all day long. And I challenge you, you're watching this. You're watching everything unfold in front of your face. You send this to them. Make this go viral. Show it to these jokers that think they mastered the markets after 1 year of trading. I can admit wholeheartedly, I don't have the markets mastered, but I'm well above the mindset of the neophyte traders and price action indicator traders. Okay, I'm still developing trader as well. I'm still developing because I haven't done this long enough to have mastery in it. However, because I went to the right source of information, I'm far, far above the herd in the cave, still watching shadows on the wall, believing it's reality. Okay, we're getting into about 2 hours into London, and at this point in time, pretty soon here, you're going to see me cut the video short, and we're just going to jump into the New York retracement here. But we can see now price is starting to retrace up a little bit. It's going to do that. Between about 12 GMT, 15 GMT is when you can expect the New York Open retracement to have unfolded. Okay? And then going into New York, you can expect a resumption, okay, price to resume in the direction of the London move, so downward, okay? So if you fail to get in on the trade up here, you're going to get another opportunity that unfolds in front of your face during the New York Open kill zone. And I'm going to take advantage of that because I didn't get the best entry on the London. And I can admit that. I have no problem admitting this isn't the best entry. I wanted to be up here, but I fell 2 pips short of my limit order. Big whoop. I get a second opportunity, and I know it ahead of time. That's why I decided to stay up, because I knew it would come up here ahead of time with a good amount of confidence. And obviously you can't know for sure, but with a good amount of confidence to sacrifice 3 hours of sleep for it, waiting for it. Okay, so let's see here. I think this is where I kind of cut the video. Yeah, so I cut the video short there. Okay, now this is New York. Okay, we're now 2:57. This is an hour later. We see the move up, prices retracing into the London move. I moved my stop from break even back up to near the initial stop to allow this retracement to occur and not take me out of my London move. And that's what I'm writing here. Move stop back. I have my fib drawn 62. We come right up to it. Look at that. We trade right up to the 62 level, and I'm going to manually enter the trade because I didn't have enough time to do a limit order, trying to launch the screen record and everything like that. So I get into the trade right there. New short position. New York Open offers optimum trade entry setup of the initial London move. And watch this. Here we go. Continuation of London move. Here we go. It's going to unfold. We trade right up to an order block too. Okay, bearish order block that set up the London move. Look at that. We trade right up to it. Not to the pip, but you'll see when the pip comes, when it gets there and hits it, and then reverses. Here we go. Here it is, happening before your eyes. I'm calling it right in front of you. Just watch. No one else will do this. You can't find anybody else out there that will do this live as it's happening. Again, other than the mentor that taught me and the people who follow him that have learned this stuff. And that's a few select few. They're not in high abundance, trust me. They're not in high abundance. Okay, so I'm adjusting the stop loss on the initial New York Open here. 10 pip stop on the New York Open trade. That's 1% risk on equity. I'm setting my projected take profit level here. Okay, and right there we have first take profit for New York Open is 4-to-1 reward to risk ratio. Okay, now price is rallying. Boom! It hits the order block. It's in the order block right now. Price is in the order block. Watch the reaction. Watch what I'm calling right now. Watch the reaction. Look what happens. They're now selling. They bring price up okay, because they're at fair market value. Why did I write this? Banks are at fair market value. They're not going to sell any more down here. They're going to bring price back up to the order block that set up the initial London move to repair orders to the downside, because this is fair market value. We're above the 50% equilibrium fair market value of the initial London range. We went to 62% on the retracement level. And I said this before, if you're buying a house, do you want to buy the house at market value, or do you want to buy it below market value? Or do you want to buy it above market value? You want the most discounted price you can get. Well, now price is at a discount, time to sell. And you're going to see it unfold. Boom, there it goes. Watch. Now it's going to lollygag a little bit at the retracement, but you'll see it's going to move down. And I called it right in front of you with absolute confidence. Look at that. Why is my stop here? 10 pips stop? Because I'm at the 50% level of the order block here. If this order block is going to hold, price isn't going to go 50% deep into it. It can, but not during a New York Open. It's not likely to, so I'm perfectly comfortable setting my stop loss for my New York trade right there on 10 pips, 1% risk on equity. Find somebody to show you this live with 1% risk on equity. This is the stuff that makes millionaires. I'm not there yet, but I guarantee you I'll be there with this style of trading. You're doing 1% risk on equity with a 4-to-1 reward to risk ratio and a 2-to-1 over here from the initial London move. And you just closed on a 6-to-1 reward to risk ratio on the euro. And again, this isn't to sound cocky, pompous, or arrogant. It's a teaching matter. Okay, I'm here to teach and show you guys what's in my brain. And yes, I do it with a level of somewhat arrogance, but I'm sick and tired of seeing fools on Facebook act like they know how the damn markets work. And they have no freaking clue. I left the cave 6 months ago. I'm so happy I did, but more people need to get out. Otherwise, you're going to lose all your freaking money. I just talked to somebody yesterday that had a $10,000 account, gave it to a bunch of jokers, and now he's got a couple hundred in it. I don't want that to be you. I don't want you to fall into that category of losing traders, a 98th percentile that can't figure this crap out when it's right in front of your face because you're too busy chasing the Lambo pics and the freaking profit pics from these fools that are in their 20s and 25-year-old jokers that can't even tell you how the damn markets operate or what a freaking bond yield is, or what COT data is, or interest rates. You know, I'm passionate about this stuff. I'm passionate about helping and teaching. That's all I care about, is to help and teach you people how to trade and guide you in the right direction. I don't steal material. I credit those that teach me, and I just pass it along. I don't reinvent the wheel. I don't need to. This works just fine. I don't need to reinvent it at all. This is precision trading in front of your face, and there's no one else that can do it. Again, I have to put the disclaimer out. Other than my mentor, he knows who he is. He may watch this, and he watches certain things just to make sure people aren't stealing his stuff. And he can go down and look in the description. His name will be there. I don't publicly mention him. I don't need to, because I've mentioned him in so many videos before. My followers know who I learned this from. The most badass trader on the planet. I don't even need to mention his name, and people should know who he is. And I hope he watches this, because this is a testament to him, to prove his stuff works. It's there, because he gets so much flack from jokers on Facebook, and he has to make these type of videos to put people in their place. Well, now, there's more proof, okay? I'm sick and tired of seeing people say his stuff doesn't work. They lost money with it. No, it works. Right in front of your face right now, it's working. All his concepts. The concepts utilized on these trades are the smart money sell model profile, turtle soup, okay, false breakout, return to order block, average daily range, OTE, optimum trade entry. He knows that these are his. He made them. These words are his. It's all about getting the right mentorship. Okay, we go right down into profit here. Absolutely taking off. Now soon here, I'm going to move the stops to break even on both of these. As price gets a little bit lower, I'm okay. I'm doing it right now. There we go. Stop to break even. Why? Because price is going to keep going down. We already retraced. They got sells in again. We're going to see another one of these form down here. A little rally here. I'm going to see if I can skip around a bit. Kind of fast forward to the good stuff. I kind of want to keep the video short for you guys. Okay, there we go. Now prices move in. Okay, both stops are at break even right now. Oh, that's too far. See how quickly it freaking moved? Dang. Here we go. It's going to happen. I'm just going to let it play. I gave you guys a peek of the good stuff there. Okay, but again, this is live in front of your faces. Okay? Perfect optimum trade entry right here. Perfect optimum trade entry. And boom, here we go. Price trades down. We're moving fast now. And it's gonna smash right through the take profit levels. Boom. One. I couldn't even annotate this fast enough. Price is just moving so crap. Boom, done. 88 pips on 2 moves. 1, 2. Called live in front of your face as we called it. Right to my take profit levels. Right where I said it would go. Closing in the void. That's what I said it would do, and it did it. Right to an order block over here, where we see some minor reactions now. This is precision trading at its finest. I want you to take this video. You can study it. You can learn from it. You can ask me questions. I'll point you to where I got this information, and I will teach it to you. And make sure you get it. And you show this to anybody that thinks they understand how the markets operate. Because they don't. Not if there's indicators on their screen. Not if there's indicators on their screen. You show this to the Lambo peeps. The people in their jet pics and crap. Flashing hundreds on their table. You show it to them. Because they don't have enough intelligence in their own freaking brain to do something like this and give back any freaking value. It's all about themselves and hyping and recruiting people into whatever goddamn organization that they're in. They're not there to help you. I am. I don't make money from this video. This money is going to generate me zero income for sharing it to the general public. But it's going to be there because I want people to know what's out there. And I want to teach people because I'm passionate about teaching. And people that know me personally know that my background is as an educator. I'm a flight instructor. Been a flight instructor for 3 years now. I love teaching people things. And I really want to master Forex. And when I get to that point in time, I want to teach people this stuff. And I'm starting to teach it, but not my own methods. I'm passing along the methods that were taught to me. I don't reinvent the wheel. This was live. Okay? Make this video known. You share it with whoever you know that trades. And then you ask me where I got this information from. It'll be in the description, but you message me. And I'll make sure you get the right Forex education. This is about being traders. Okay? That's why you're involved with Forex. Don't chase the hype and superficial materialistic crap you see on Facebook from 20-year-olds that have no idea how the market operates. They were not mentored by the person that I was mentored by and learned from. Not at all. Okay? So that's the end of the video. And we can see now, what did price do? We get a bounce off that order block. Just like I said, it's a bullish order block. What do we get? A bounce. Could have longed there, but I needed my sleep. I'm done trading for the week. Having a good weekend. Euro, pound, beautiful trades. Called it. Up day for the dollar. That's how you make 120 pips in 3.5 hours, 4 hours or so, with precision and accuracy. With that being said, I wish you guys good luck and happy trading. Take care.